We actually think that inflation is a good thing, and that when we see that inflation is actually tied to rising aggregate demand and a growing economy, in our view, that can be a favorable investment environment and a favorable environment for investors and long-term returns. That said, what does that all mean? What does that mean for inflation? And there's been a lot of discussion about inflation in recent months and in recent weeks. And just like what the central banks have been discussing, we also believe that there's likely to be more inflation pressures and higher inflation than we've seen certainly over the past year and into potentially 2022. But we do believe it's temporary, quite similar to how the central banks are positioning at present. But we actually also believe that that is a good thing. It's much better than the alternative, and we believe that it is manageable at this point. The concern, though, will become inflation expectations, and that will be what we need to be monitoring going forward, because that could be a risk for all investors. Now, when we think about how we manage the portfolio, we are entirely concerned about preserving the purchasing power of a client's assets. And going forward, we do believe that interest rates are likely to rise, and that will put pressure on the values of fixed income investments, as well as the value of those investments. And so we are concerned about the fixed income market at this point. By comparison, in the fund, we invest in the stock, so the equity of companies that are growing their dividends, and that is a central point to the Iris investment style. So we're investing in companies that have the business models that are sound, profitable, generating the cash flows that are capable and able to be allocated to dividends on behalf that will benefit shareholders.